Hey, good morning, guys. It's Grizz back here with another video. This is going to be a quick and easy one. This is not going to be one of the traditional 100K challenge videos. This is pretty much going to be going over exactly how I trade and why I take the certain trades that I take because, I'm pretty sure you guys want to see the reasoning on why I'm jumping into certain positions and why I'm exiting certain positions. So it's just going to be a little quick overview explaining my thought process. So the very, very first thing that I do is I jump onto the daily chart and I want to see the direction that we're heading. For example, you're able to see here that we were clearly in an uptrend and we never really broke to the downside up until we got this giant market structure shift with this candle. So by me jumping on the daily and say I only see this, I'm pretty much going to think we're going to continue going up until market tells me otherwise. It's not really the best idea to always go counter trend. Now, this is just solely to see where I think we could possibly hit. I'm going to have certain levels charted out. Like, for example, here, I'm probably going to be like, okay, we're heading up. We're probably going to sweep these, then possibly do a little retracement and then back and forth. But always take a look at the bigger time frames just to see exactly where we're at. If we're displacing down like this and we still haven't swept any liquidity, then it might make sense to just wait and look for a short opportunity versus just trying to go counter trend, because counter trend most of the time will cause you to lose money unless you actually know how to snipe entries, and you could get some insane gains, but that's so much more advanced and it's very difficult to do. So after the daily chart, I jump on the 4 hour and I like to look for fair value gaps and if we've swept any liquidity. So 4 hours, 1 hour, and 15 minutes are my go-to, and those charts are typically the ones that I spend the most time on doing my charts. That's where you're gonna see these lines. I place my liquidity up here, for example, 1 hour liquidity, because you could see this on the 4 hour, you can see it on the 1 hour. So I want to make sure I'm telling you guys and I'm telling myself my time frame up here. 1 hour buy side liquidity. What I predict would happen would be depending on the open, but more than likely would probably come up here, sweep this liquidity. We'll have a market maker buy model completed, and then we could possibly even head up for previous week size. Or if it's at the 50% retracement of the fibs, we could probably start seeing a retracement back down to other previous liquidities, such as this one or here. But the biggest takeaway from these larger time frames is place really good fair value gaps, even if they're a little bit larger. If we place a really good fair value gap, for example, this one, we know where price could essentially go. We know that typically in a fair value gap, price likes to at least achieve the 50% retracement in the fair value gap. I always have my fair value gaps with this little purple line. It shows exactly the midpoint. This was a really good example here. The price came down, wicked into the 50% retracement of the fair value gap, and then decided to rip up. And you could do the same exact strategy on smaller time frames because time is fractal. I personally just prefer to keep larger fair value gaps. I don't really like going down to too small, because the thing with going too small, you could easily get how should I say it? You could easily get tricked because you're gonna see a couple down close candles and essentially you'll probably get stopped out. You can see your position run down, get wicked out, and then you'll see it continue heading towards your TP, which it could be really frustrating. But that's actually a really good use. I'm making this video to show you guys that you don't really need all this crazy stuff that people try teaching you online. Like I solely trade fair value gaps. Every now and then you'll see me chart a order block, and then I just place liquidities. Most of this money that you'll generate from the market has to come with time, because with time you're going to learn how to read the price action, and that's something that nobody teaches you on here. I want to say it's almost impossible for someone to teach you how to read price action. You get that from experience. Trading in the markets, you're going to tend to see things happen all the time. You see how fast candles are building, and you kind of tend to know what happens from seeing it so often. And I can't stress that enough. That's the main reason why new traders and these gurus that are teaching them, telling them that they could become a millionaire in a month, and it's so frustrating, because while you could get extremely lucky and make insane gains, 9 times out of 10 that will not happen. You won't make crazy money. You'll probably lose money to begin with, but if you stick to it, chart out, and just, even if you're not trading, come into the market, watch the trades, watch the price action, watch these candles form. You'll get a grasp of what's happening, and just keep watching it. Watch it, watch it, watch it. Chart out fair value gaps. You could put low interest liquidity, which will be like tiny ones here, not necessarily at the bottom, but price could possibly reach here, or could possibly reach up here, or it could possibly reach up here. Just chart out areas where price could possibly go. Take a look at what's happening. Don't just go long because you want to go long. Make sure you have reasoning. Did we come up, form a fair value gap, retrace into the fair value gap? Then we began to have a market structure shift. We started displacing higher. Okay, what would probably happen here? We would probably head up to these equal highs. You could easily place a long right here, let it run up. If you see it start displacing back down, maybe even below these data lows, it might be good to just trim it and wait, because you were probably in the wrong trade. But if you see it going up and you see it riding up, going your direction, you probably know it's going to hit the liquidity that you charted out. And essentially, markets are always going to be either hunting liquidity or rebalancing to inefficiencies. Inefficiencies are these fair value gaps. Liquidity, up here, where there's resting orders. There could be resting buy orders, there could be resting sell orders, but that's what liquidity is. You guys let me know if you guys want to see a more detailed version of this. This is kind of just quick and easy, trying to explain to you guys how you guys could do this too, and as long as you have the willpower to just stick to your guns, don't necessarily hold on to losers too long. I am positive you guys could follow along, do exactly what I'm doing, and make money off of it. It's The trading is not the hard part. It's the emotional aspect of the trading. It's overcoming the fear, the FOMO, um, you know, b- being okay with being wrong on a trade. That is the biggest thing. People hang on to these losers, and they'll be like, "It's gonna reverse." Well, dude, how about you cut it? You wait, make sure it does reverse. If it reverses, you can always re-enter, and if it doesn't, well, you just saved yourself money because you scrapped that trade before it became even a worse loser. Just always keep your losers small. That is the best thing you possibly do. But yeah, let me know if you guys want to see another trading video. I could definitely go more in detail with exactly my trading strategy, and I could do more of like in the mind of what Grizz does. But yeah, I was gonna have it for today's video. I hope you guys have a great weekend.